Let's do it. Good afternoon, it's Robert and Julia Miller with Rethink Real Estate with another exciting real estate update.
Exciting and thrilling.
Coming to you from beautiful Sun City West, our new humble abode.
A new home studio.
Yeah, new home studio. We'll evolve it. We're kind of still putting stuff away and getting everything where it belongs. So
Right.
So we're going to go over a little humor, some history. We did just get a Cromford report review yesterday, so Julia's going to touch on that with some bullet points. I've got a few news articles just want to touch on, then we'll go over rates, and then we'll wrap it up with the inventory.
Yeah. So we try to come to you. We're going to start going it on a bi-weekly basis every other week.
Right.
And just
I think that'll be a good balance.
Housing news and anything that we feel is of value to you in making a decision to buy or sell a home right now in the crazy economy that we have. So.
All right, you got a joke for us?
I do.
All right, lay it on us.
It bothers me when I see tax money wasted on signs telling deer where to cross the road.
Yeah, I heard that funny radio broadcast. A lady called in literally complaining that they shouldn't have the deer crossing in the middle of a highway. It just made no sense whatsoever.
Makes no sense. Oh, man.
Okay, you know, I really don't know what happened to the guy who told his wife she doesn't need a watch because there's a clock on the stove.
Oh boy.
That guy just disappeared.
I
don't know
can't
what
find
happened.
his
Once
body.
he's here and now he's gone. I don't know.
I can't explain it.
Okay, moving on. A little history for this week. 2006, Twitter launches July 15th. Does that make it coming up? Boy, 17 years?
17 years. Wow.
Hard to believe.
Wow.
Okay, 1979, the abandoned U.S. Skylab space station falls back to Earth, July 11th. 1913, Death Valley, California hits a record U.S. temperature of 134 degrees. July
And they
10th.
may hit that soon, probably with the temps we've been having. Usually the temps here in Central Arizona are pretty close to what they see in SoCal. So, let's hope not.
We'll see.
Yeah.
Okay, 1804 on July 11th, U.S. President Aaron Burr kills Treasurer Alexander Hamilton in a duel.
Yes, that's the way they figured it.
You're on the Senate floor, you just can't reach an agreement.
Power.
Let's go out back and settle this. And we got to get moving forward here, buddy.
Oh, boy.
Wow, how times change. Okay, 1776, a statue of King George III is pulled down July 9th in New York City.
So they did it then too.
Yeah, absolutely. All right, there's a little history for you for this week. Moving on to a little bit of news.
And I do want to apologize. We don't have our tripod. We don't have our mic. Those things are still packed. We'll figure that out over the next
it'll get back to top notch here before long.
Yeah, it will.
Okay, housing news. Fannie Mae predicts the Federal Reserve will raise rates again this summer, and mortgage rates will likely follow, rising slightly from July to September before a fourth quarter fallout. Freddie Mac predicts the economy will avoid recession. That's good news, and mortgage rates will stay above 6% all year. And you've heard
a couple things.
Like 2024.
Yeah, I've heard, first of all, that rates will remain high through 2024, mid to late 2024 is what some experts are saying. And then, unfortunately, we were hoping that the Federal Reserve would be able to say, okay, things are easing, the economy is letting up, we can stop doing these base hike rates, and but no, that's not the case. Unfortunately, we're at and over 7% now with mortgage rates. So,
we'll go over rates here in a little bit. All right, baby boomers, generally those 61 to 74 years old, are keeping the housing market afloat.
I heard a funny one. I'll pause you real quick there. Baby boomers are usually blamed for something, or they're being praised for doing something. So there's no
in between.
There's no in between.
It's either yay or nay.
Right.
Yeah, that sounds about right. Okay, due to historic home equity wealth, they can move up, refinance, or downsize with little regard for interest rates. Boomers now make up 39% of home buyers,
Wow.
the most of any generation, and an increase from 29% in 2022. So
Wow.
that's a pretty big jump up.
That is.
Wow.
Yeah, we are in that category.
Mm-hmm.
We are in that category. We had a good amount of equity, so we went ahead and sold and changed the location.
Yep.
Yeah.
That's the way it rolls.
Yep.
Okay, suburban remote, still residuals from the pandemic and isolation period. The ratio of Americans working remotely increased from 5.7% all the way up to 17.9%.
Whoa.
That's between
That's
2019 and 2021.
Okay.
And it may rise as much as 35% by 2025.
Wow.
So
Wow.
remote work is here to stay.
Yeah. Yeah.
All right, moving on. Economic news. Jobs lose steam. June job growth slowed following a strong May surge. Non-farm payroll increased by 209,000 jobs, lower than the expected 225,000.
Okay.
I never know
I know. I
how
don't
the
know
market's
what
going to
think
take
about
it. Is that good or is it bad?
Yeah.
The bears seem to have a way of making it bad. Either way, that
Right.
number comes out. So.
Yeah.
All right, moving on, regulatory news. Assessing the minutes released last week, the Fed's June meeting notes suggest policymakers paused on raising interest rates to assess the impact of their 10 previous hikes.
10 previous hikes.
Yeah, and there'll be
Wow.
11th in this month, I think. I'll make the prediction
I think
now.
so too.
I think it'll be 0.25 though.
Yeah. Okay.
So we shall see. Student loan forgiveness is finally nixed. On June 30th, the Supreme Court struck down President Joe Biden's student loan forgiveness plan, which aimed to provide up to $20,000 in relief to individual borrowers.
Okay.
As long as the economy stays strong, I think that'll stay buried, but we shall see. I'm sure they're going to keep pushing for it.
Yeah.
Okay, that takes care of the news for the week. Let's move on to the Cromford report.
Okay. So it's been about a month. We did kind of a June review, the 1st of June. Now we'll do the 1st of July. So basically it will encompass June statistics and just a small part of July, which are only equated to about 4 business days.
Right, because you had the holiday in there.
Yeah, the holiday, and it was like on a Tuesday or something. So it was kind of a funky couple weeks already, or 10 days. So let's see. The inflation report comes in this week. We're all holding our breath on that. Have a feeling it won't be quite what the Fed wants yet.
See how that affects the market up or down. It's kind of got everything in a holding pattern right now.
Right. Interest rates for the week of beginning July 10th were 7.12 for conventional. I'll give you these highlights. Robert will, of course, give you interest rates from Melissa with Bay Equity. Those vary a little bit, and they are indices. So your jumbo was at 6.94 and FHA was at 6.82. So, bleh. Accepted contracts are down. July, however, is always low. Accepted contracts for the month of June and part of into July is at 1,371. So usually we see a pop back up around August. People that haven't made moves over the summer go, oh yeah, school's starting, or oh yeah, fall is coming soon.
Time to get settled before the school year starts.
Yeah,
absolutely.
or fall sets in, yeah. So will mortgage interest rates continue to rise in 2023 is always the big question, because we want to know what's going to happen moving forward, whether it's appreciation that we're looking at or things coming and going off the market. Basically, the experts are saying no one knows. They're mixed.
They're mixed
All-
bag. Everybody,
yeah.
they ask all the gurus and they all
They
have a
say
different
yes,
answer.
they'll
so-
go. They'll continue to go up. No, they'll stabilize. It's just kind of all over the board. Even NAR, National Association of Realtors, has kind of changed their tune over the past month, here and there. So most experts are saying a drop or moderate. The rates will moderate between 6.5 and 7, which is kind of where we've been for a little while now, and we're going to see it come back down. Is what they're believing. Most experts are. The Fed meets actually the 26th of July, so I think we'll have another video before that meeting, I believe.
Possibly.
Yeah. CPI is at 4%. Rentals, which affect the CPI for housing and overall. So let's talk a little about rentals. There's been an increase in rentals, and we kind of started talking about this a little bit. Actually, I'm jumping around here a little bit. But there's been a spike in supply. A lot of it is short-term rentals becoming long-term rentals.
Right.
We had a lot of short-term rentals because we had the Super Bowl in the first of the year, and lots of other things. Waste management, of course, waste management.
A lot of
long-term
people, because of the Super Bowl, they became short-term rentals for one season.
Yeah.
And now they're back to long-term.
Well, we're seeing state or city municipalities say, okay, if you're going to have a short-term rental, you're going to have to pay some taxes and pay to be licensed.
And basically,
to
you're
be
going to
one.
be, you have to be a licensed short-term landlord, and there's some accountability and some
Yes.
liability involved that is, I think, pushing some people away from
I
the
think so.
short-term rental.
Yeah, I think so. Moving back to FHA, well, kind of interest rates and things like that. FHA buyers have increased in the market, 22% now, which is great. You know, the investors are kind of backing off of the market right now because things are a little unsteady. So that's making way for FHA and first-time home buyers, which is great. And also lending has helped them as well, is helping the FHA buyers. So with lower PMI and there's no down payment assistant programs again. There's all kinds of things that are really helping first-time home buyers and FHA buyers. So anything to add to that so far?
Not so far.
No? Okay.
2-year appreciation. If you've owned your home 2 years, you're looking at 13.7% appreciation. Not bad.
Yep. Long-term appreciation is definitely better. Most people, if they've owned their home, well, actually, this is 57% of homes on the market have been owned for 3 years or longer.
Right. If there's a silver lining for higher interest rates, you get a bigger tax deduction.
Yeah, for sure. There you go.
Writing off more interest.
Yep. Let's see. Average dollar per sales per. Why do I always trip over that? Price per square foot, basically.
Price per square foot. Yeah.
We saw a decrease in June of 4.8% year over year. That's a year over year decrease. Month over month, however, we're at 7.6 increase. So that's great. Median sales price did decrease some 6.6% for June.
Back to the inflation rate, we're running at 4%, so we still have 2% more to go to meet with the Fed ones. But interestingly, without shelter, the inflation rate is actually 0.6%.
Yeah, it's actually quite low.
If you pull housing out of there, it's it's below where they want it, 0.6%. So I found that interesting.
There's still an argument on how they're calculating those shelter percentages in there. So
yeah, they're still questioning whether we're measuring inflation correctly.
Some economists are saying it's just wrong.
Yeah.
It's misleading. Yeah.
So there are no more buyer markets. Casa Grande was the last to yield, and so everything is in a slight seller's market. It puts the index where perfectly balanced is 100. It's at 163.
Mm-hmm.
So there are some areas that are extremely hot that are driving that number up. Chandler, Avondale, Fountain Hills, Glendale, to name a few. But overall, 163 is the index number, so we're in a seller's market, but it's not an extreme seller's market in most areas.
Right.
But we do not have any more buyer pockets
No.
right now. So
Yep, most cities are stabilizing by decreasing their CMI, Cromford Market Index. Demand is low, below normal, but so is supply.
same thing.
So-
We're just running low on everything. You know, inventory is low, number of sales are low, but it just keeps running in parallel pretty much.
Yeah.
So
Yeah, July through the end of the year is the best time to buy. You're gonna get your bargains this time of year. Although it is a seller's market, you know, sellers aren't giving it away for sure. But it's still the best time to buy, and prices are still increasing. Kind of gone over that, so.
yeah, you're not. You know, you don't want to be buying in a buyer's market, ironically, because
Right.
what you buy this month, if the buyer's market continues, prices are going to continue to drop, and the home you bought last month is going to be worth less the next month. So you want to buy in a seller's market, just not a out of control seller's market. So this is actually a very good time to buy.
Good time to buy, yep, during the summer slowdown. All right, contract ratio. We have the contract ratio, and this is for the week prior to the 10th, so ending on the 8th, I believe it was. Contract ratios, we have 7,435 under contract, 10,200 active listings, so that puts us at a contract ratio of 72.9%, tracking with 2018 numbers.
Okay, that's
Not
good.
bad, yep. New listings is down, obviously, 48% from October 22nd, which was the height of inventory market sort of things. Remember, the height of the prices was December. Rental supply, we talked about that already. Price reductions, so little over 10% of active listings have seen a price reduction already. So, and the median is $10,000. So sellers are selling, but they're having to realize different prices.
Takes some work now.
Yeah. Median days on market's 21. That's pretty normal. We were at 56 in January, just to give you a little insight there. Seller paid closing costs is at 42%, and this is a June number. Don't have enough data yet for July. So
What does that mean? Seller paid closing costs.
Sure, concessions.
Concessions, 42%.
42% of sellers are giving concessions.
Oh, are getting, got it.
Yep.
They're 42% are giving some form of concession. Okay, I'm with you.
So let's see, summary is supply is declining, supply decline is slowing, rental supply is growing. CPI inflation report is positive, expected to improve in Q3. Greater Phoenix sellers market is stable. Buckeye and Casa Grande are the last balanced markets, actually. I thought it was Maricopa too.
They were.
Maybe I wrote that wrong.
They were behind everybody else, but they fell in line a while ago.
Okay. So I won't go over it. In June, we did kind of a recap of where we were at in comparison to year over year, June to June, and then year over year, height of the market, which was December 22 to June. So if you want those statistics, go back and watch that in our last update. Those are excellent to look at just to understand where we're at. And keep in mind, these numbers that we look at looking backwards aren't predictors necessarily. They are just trailing indicators of what's happened, what we've already lived through. So, and she closed out by saying foreclosures are still very low.
Yes.
Very low. A little
All right,
blip.
that's our Cromford report summary.
Yeah.
Interest rates, 30 years, 7.021, 15 years, 6.476, and the VA is coming in at 6.791.
Oh.
So everything at that 6.5 to 7 mark.
Mm-hmm.
Inventory remains low, valley-wide 11,258. In Peoria, they've got 330. Surprise is up to 583, but again, I didn't look at that in deep detail. I suspect a lot of that is new construction.
Okay.
Trilogy at Estancia, 22 homes available, typically low number during the summer. That's about what we expect. Price range is $499,800 up to $1,250,000. Estancia Village on the family side, 36 homes available, price ranging $440,000 to $1,024,900. The Grand, 71 homes available.
Wow, that's pretty good.
$212,500 for a condo, and $989,000 tops the list. A little closer to home here in Sun City West, we have 116 homes available. Price range $199,000 to $898,000.
All right.
On the golf course in Sun City West, we have 14 homes available.
Okay.
$285,000 on the golf course.
Get you on the golf course.
Can't beat that.
2 bedroom, 2 bath.
Yep. $949,000 tops the list. Sun City West with pools. Believe it or not, there's only 6 currently.
I believe that. Yeah.
$395,000 is the most affordable. $898,000 is the most expensive. Sun City West sold in the last 30 days. 117 homes. A lot of sales going on. The average sale price $385,954, and that comes out to a 97% of list price. So buyers, that's what you should expect to pay when you see a list price, 97% on average. Don't be surprised if it is a smoking beautiful home, but a bunch of people are going to want that you're going to pay over 100% of the list price.
We are seeing some multiple offers, and people going over list price. Some not crazy, but some.
Yeah.
It's happening. It's still a hot market.
Yep. Finally, active. The average home price is $431,449. That comes out to a cost per square foot of $233. So that's where we're at in Sun City West.
Okay, all right. Well,
All right.
Thanks for that update.
That's your report, your bi-weekly report. And we will see you again in a couple weeks. Have a blessed week and take care.
See you soon.